What loan program, if you're not a veteran, allows you the lowest rates across the board, the lowest monthly mortgage insurance, and ask for zero down payment? I'm going to tell you what it is right now. USDA. It's the USDA loan program. It's the sleeper among all the four choices that you have as a first-time home buyer. We're going to break it all down today. I'm going to give you an example of why you would want it if you're eligible for it. And I'm also going to show you, if you are eligible for it, why you wouldn't want it, and other factors that you need to know about. So share this with your family and friends as always, and let's kick off this rodeo right now. Hi folks, I'm Kevin Fagan. I'm the Mortgage Patriot on your side, nestled here in the hill country above San Antonio, Texas, and serving all you proud Texans and all you great folks all around the country. Another great one, because why? Because I have yet to really focus on this one loan, and I'm going to show you the big reason why, but there's only four choices for a first-time home buyer. It's the VA loan, which is the king of them all, but most people aren't veterans. Then you have the conventional loan, you have the FHA loan, and you have the USDA loan. We're going to talk about the USDA loan today. So as I do that, please hit the like and subscribe. It really helps me bring my videos to the forefront. It helps you, it helps me, it helps everybody in the Patriot Nation. So hit the like and subscribe, and let's get into all that great content right now. Here's the quick flow of this video as we talk about the USDA loan. We're going to talk about the eligibility of it. If you're not eligible for it, obviously you don't need to worry about it, but I'm going to tell you, if you're trying to buy outside metropolitan areas, 97% chance you're going to be eligible for it. So we're talking about the eligibility. We're going to talk about the guidelines and the pros and cons versus an FHA versus a conventional loan, for example. And we'll use examples along the way. So let's get into that right now. Okay, Mortgage Patriot, why have you not mentioned the USDA loan before? Well, I have actually, in part in comparison, but not haven't done a dedicated video. In either case, there's two main reasons. One is eligibility. And the second is you just simply can't buy as much home compared to the other loan programs. I'll get into that. So the eligibility is that you can only be eligible for this loan if you're buying a property outside of dense metropolitan areas, outside of city limits, typically. Okay, but for people that are doing that, virtually every property is going to be eligible for you. So here's where you go, knowing right away. Type in this link right here, copy it somehow, put it in a browser, and go to this website, the USDA website. You're going to see on the left-hand side a button called Single Family Housing Guaranteed. Hit that button right there. You'll see a button below it saying eligibility. Hit that button. Once you hit that button, you'll be able to plug in the actual address or maybe even the zip code, but I think it's just you have to know the address of the property, and it'll tell you right away if that house, that property is available for you. Hopefully that makes sense. Here's a quick map, kind of central Texas and slightly to the east, showing the availability of the USDA program. You'll notice kind of a triangle there with Austin on the top, Houston to the right, and San Antonio to the left. The shaded areas covering those little cities, those are the ineligible USDA areas. Everything else is eligible. That's a ton of properties out there. There's a ton of little towns, rural areas, all eligible, all 100% eligible for the USDA loan. So your circumstances are going to be the same. Wherever you're living outside of the city limits, it's going to be eligible for the USDA. Let's talk briefly about the credit scores that are required by the USDA relative to the other loan programs. And then I'll show you why the two big advantages of that USDA loan program. And then I'll show you, of course, the one big disadvantage and why I haven't recommended it to this point. Okay, so credit scores, simple enough, right? On an FHA loan, you're only required to have a 580 score. Now, likely, it's easier to get qualified on the basis of a 620, but theoretically 580 could work. On a conventional loan, hard stop at 620 or less. So we got to get you to 620 or more. And then you'll see on the right side there, the USDA loan requires the highest of all the credit scores. It requires a 640. That's because the loan is a zero down situation. And so the government's funding you 100%. They want to be very conservative and make sure you have a better score than just 620. So if you're not at 640 already, don't worry about it. I have got plenty of ninja tricks up my sleeve to help you get to that spot. It's just time and action steps to always move your scores. So let me help you with your scores, and we'll get you into whatever loan program is best for you. Let's get to the two big reasons why you'd want to access the USDA loan if it's eligible for you. And the biggest one is zero, as in zero down payment. And just like a veteran's loan, a VA loan has zero down payment. The USDA loan also zero down payment requirement. So let's take an easy example, $300,000 home, okay? $300,000 home on an FHA loan requires 3.5% down. 3.5% of 300,000 is 10,500. That's a pretty decent sized check to write in addition to your closing costs and your prepays and escrows. Remember, the down payment is just bucket number one of 3 buckets. Okay, so on a conventional loan, normally it's 5%. Sometimes I can get you down to 3%, depending on your income. But let's say it's 3%. 3% of 300,000 is $9,000. That's still a hefty down payment. USDA loan, 300,000 of zero is zero. So you're saving anywhere from 9,000 to 10,500 at least, just on the down payment portion of all the cash to close you're going to need. Incredible deal on the USDA, again, if it makes sense for you. So what's the second big advantage of the USDA loan? Well, it's got the lowest monthly mortgage insurance, absolutely over the FHA and the conventional loan. So let's take an example. On a $300,000 loan, if your credit score is around 660, let's just take that example, you're going to see a monthly payment on your USDA loan of about $87.50. Compare that with the FHA loan, which is about $50 more at $137.50. And compare that to the conventional loan, which is even far more expensive than the USDA loan at $212.50. So that's over $125 more on the conventional loan and $50 more on the FHA loan. So your monthly payment on the USDA is going to be your lowest probably because your rate is also going to be the same roughly as your FHA loan. So when you compare all these on a monthly basis, the total monthly tab is going to be less in the USDA loan. Just remember that. It's a big advantage. So once again, why would you not want to use the USDA loan if you could? And here's the unfortunate answer is because they greatly restrict your purchasing power. Let me show you what I mean, unfortunately. Because it's a very conservative loan, meaning the government does not want you to default on this, and they're doing everything they can to prevent you from defaulting. So they restrict your debt to income. You can't have near as much debt as you can with the FHA loan or the conventional loan. Okay, so given, let's say, look at this example here. Let's say assume a $75,000 household income. Okay, $75,000 of household income will buy you currently at today's rates a $300,000 house approximately with an FHA loan. In other words, you could qualify for $300,000 using FHA. Using a conventional loan with today's rates, you could only qualify for about $280,000, a fair amount less. But look, unfortunately, at the USDA loan. Not good news, folks. $220,000 would all you'd be able to qualify for on the same $75,000. That is why I have not talked about the USDA loan much before, because in most cases, you get down to the wire and people say, well, I really want to buy more home given my income. Well, then we have to go to the FHA world, which isn't fine, but it just doesn't allow you to have that 0% down and that low monthly mortgage insurance figure. So sorry, folks, that's the bad news on the USDA. Let me close this out by showing you a really good example of how to use the USDA loan at its maximum benefits. Let's take an $80,000 household. You're able to buy a $225,000 home outside the city limits. You put zero down. You still have bucket number 2, bucket number 3 at closing, which is going to be about $9,500, at least in the state of Texas. $9,500. Now you can get seller concessions. I talk about frequently on other videos. That's critical. It's kind of like down payment assistance, but it comes straight from the selling party, right? And you're allowed up to 6% on a USDA loan, which is great. So let's say you can even get 4%. 4% of $225,000 is $9,000. So in other words, from a check that you would normally have to write for $9,500, as we take out the $9,000 from the seller contributing to your closing costs, you only have to write a check for about $500. So using a USDA loan, along with maximizing it as much as you can, your seller concessions, you should be able to absolutely slash your cash to close. You should be able to buy a $225,000 to $250,000 home, even a $300,000 home, writing a check for less than $2,000 frequently. That happens to me all the time. So call me if you want, 210-317-6514. Text me. I'll be glad to see if you're eligible for the USDA, if it makes sense for you. We'll just figure out what's best. So as always, I'm Kevin Fagan, the Mortgage Patriot, on your side. Make it a great one.